Welcome back to our live cryptocurrency trading series. Today we're talking about Feds to the rescue. Is DC pumping cryptocurrencies? And this is a chart going back to early January, and these are the major micro coins, that is micro payment processing coins, Bitcoin Cash, Litecoin, and Dash. And you can see that the cryptocurrency carnage has been dramatic. Okay, since early January, Bitcoin was trading around 15,000, and at its low here, February 6th, it was trading at 6,500. So about a 70% drop in price across the board in the cryptocurrency markets over the past 30 days. But what's going on now? Well, it looks like there's a nascent recovery here, beginning on February 6th, and it began when federal regulators met in DC. So imagine that. Everything in the cryptocurrency world is down the rabbit hole, through the looking glass, you know, part of the matrix, and all cattywampus, because it just never makes sense. You would think that federal regulation bad for cryptocurrency, but again, you'd be wrong. And this is what's going on in the market right now. It looks like the feds are rescuing the cryptocurrency markets. The feds to the rescue. Is DC pumping cryptocurrency? This is all the red bubbles here are all the bad news that has been bombarding cryptocurrency like a tsunami over the past month. January 10th, this started with the Korean regulators making statements, and CNBC reporting it badly. Okay, reporting it. I'm not going to say it's fake news, but certainly there's hyperbole and inaccuracies in this report. But their headline was "World's Biggest Cryptocurrency Market Considers a Bill to Ban Trading." Well, you can imagine how that spooked the markets, and negative investor sentiment just fed it from there. And you got other stories piling on. January 16th, the CFTC subpoenaed Bitfinex and Tether, looking into market manipulation. And just looking at those stories from a standpoint of how they affected the markets negatively, it started with obviously that first story from CNBC. One of the world's biggest cryptocurrency markets considering a bill to ban trading. South Korea trades about 10 to 15% of all Bitcoin and Ethereum. So that would obviously spook the markets. And then the Bloomberg and CCN reported that the CFTC had issued subpoenas to Bitfinex and Tether regarding Tether running a fractional reserve to artificially inflate Bitcoin prices. And so that further spooked the market. Then, of course, Stripe withdrew its support for Bitcoin payments, and they're a $9 billion company, a huge payment processor. And the reasons, they said, just invoked all the fears of Bitcoin enthusiasts, which are all the flaws that are plaguing the system, which the block size limits have been reached. Bitcoin is better suited as an asset than a means of exchange, so it's slow and it's expensive. It says here that by the time a transaction has been confirmed, the value may have already changed, so it's too volatile, and the fee of tens of US dollars is common, making it as expensive as bank wires. So that began the bloodbath, and then it continued with the largest cryptocurrency heist in history, and actually the largest, not just the largest cryptocurrency heist, but the largest heist period. More than $500 million, more than $500 million of NEM coin were stolen in a single transaction from the CoinCheck exchange, which was not storing the coins with proper security. So the CoinCheck hack, which is the second huge hack to hit Japan. Okay, remember the Mt. Gox hack back in 2014, and then of course Mark Zuckerberg had to pile on with Facebook banning cryptocurrency ads, and that was January 30th. The world's central banker, of course, piled on as well, saying Bitcoin is a bubble, a Ponzi, and a disaster. And there he is, he's the chairman of the BIS, which is the bank International Settlements, the Bank for International Settlements, Augustin Carstens, and in a talk at Goethe University, he basically dismissed Bitcoin as mega sudokus. So check this out. That's what he called them, mega sudokus, just big puzzles. So that just shows how central bankers and very smart people across the board, financial experts, often don't take the time to understand what cryptocurrency actually is. Sure, cryptographic math puzzles are the architectural building blocks of a blockchain, but that doesn't mean that they're just math puzzles. Those architectural building blocks of the blockchain are what gives the cryptocurrency its emergent intrinsic value. So, and that intrinsic value consists of digital ownership, digital scarcity, and the fusion of a currency with a payment system. So that technology is often not understood by central bankers and financial analysts, Wall Street bankers, and often they don't take the time to understand it. So we're going to talk about a very different story today, because when federal regulators met, after Facebook piled on, major British credit card issuers also banned cryptocurrency purchases. So, this is just bad news, a tsunami of bad news. Just, everybody piling on and just trashing cryptocurrency. Then the federal regulators met in D.C. You might have thought this was, not going to go well, and to a lot of people's surprise, it went very well. This is what happened at the Senate hearing on February 6th, where the U.S. Senate Committee for Banking, Housing, and Urban Affairs met. And this is the yellow circle after that was what happened to the markets after those federal regulators met in D.C. And this is an article from Bitcoin News. Meet Bitcoin's new rock star, CFTC's J. Christopher Giancarlo. And this is the guy who is the chairman of the CFTC, and he surprised everybody when he came out. I'll put the video link below, but you got to watch it. It's about 2 minutes long, but I'll just summarize it here. He said, "I want to begin with a slightly different perspective as that of a dad. I'm the father of 3 college-age children, and during their high school years, we tried to interest them in financial markets. We set up small brokerage accounts they could use to buy stocks, yet other than my youngest buying stock in a video game company, we haven't been able to pique their interest in the stock market. I guess they're like most kids their age," he says. "Well, something changed last year. Suddenly they were talking about Bitcoin. They were asking me what I thought and should I buy it." And then in the words that may echo for decades, if not centuries, in the future of cryptocurrency, he said, "It strikes me that we owe it to this new generation to respect their enthusiasm about virtual currencies with a thoughtful and balanced response, not a dismissive one." So, in other words, not dismissing these as just mega sudokus or big math puzzles, or as Jamie Dimon dismissed it as just a fraud, and several other Wall Street bankers have done. He's saying, let's not be dismissive. Let's take a look at it and take a real good hard look at the value of this technology. And I thought it was also very encouraging that they talked about 3 pillars of the virtual currency system: cryptocurrencies as a replacement for dollars, ICOs like a stock offering, and distributed ledger technologies, the technical framework known as blockchain. And saying that the potential is that underlying blockchain could be as transformational as wireless was years ago. And that is a huge thing to say, on the record in front of the Senate committee. But what's even bigger was he introduced the term HODLer into the congressional record. He said, "My niece is a HODLer," and he just said HODL. It stands for Hold On for Dear Life. I don't know if he said HODLer, but in the video I saw, he said HODL. But he did introduce into the lexicon, into the congressional record, the actual term HODL. So now HODL is in the congressional record. And when they talked about the potential of blockchain in the hearing, and there's also a video on that, but he said it's important to remember that if there were no Bitcoin, there would be no distributed ledger technology. That distributed ledger technology grew out of that technology initiative, referring to Bitcoin. And he said the potential ranges from the way charity dollars are spent, the way refugees are accounted for across the globe. Use it for the 2.5 billion people around the world who don't have access to banking services. He mentioned that 66 million tons of American soybeans were handled through a blockchain transaction by the Dreyfus Corp for sale to China. He mentioned it's got the potential for regulators to do really close market surveillance. And he actually said that in the financial crisis of 2008, if we had been able to see the counterpart credit exposure of one bank to another in real time with precision, that would have enabled much more precise policy choices that had to be made in a rush without good data. If you remember, the 2008 financial crisis had a lot to do with banks' exposure to subprime mortgages and how those loans had been repackaged and resold to other banks and countries and other funds, and it was impossible to, as he mentioned, to look at and precisely analyze the counterpart credit exposure of one bank to another in real time with precision. But blockchain would have significantly facilitated that fact. And the chairman of the SEC, this guy Clayton, said that anywhere in our economy where verification and record keeping has cost is an opportunity for this technology, and I hope people pursue it vigorously. So, in summary, huge market drop in the range of 70% across the board in cryptocurrencies over the past 30 days. A barrage of bad news, a tsunami of bad news in the cryptocurrency markets, affecting obviously all the cryptocurrencies, and these are just the micropayment coins: Bitcoin Cash, Litecoin, Dash, and Bitcoin. And recent meetings of federal regulators in D.C. Propping up the cryptocurrency markets and beginning what looks to be a nascent recovery in the market. So Feds to the rescue, and like I said, the Bitcoin market never ceases to amaze. Down the rabbit hole and through the looking glass, the weirdness in this new futuristic technology just keeps getting weirder. And here's his tweet after the testimony. He said, "Thanks for your enormous response to my recent U.S. Senate remarks. LOL, as you invest, remember caution, balance, and do your own research." So he's learning the lingo. So good for you, Mr. Giancarlo. And hopefully this video has given you some valuable information that you can put to use to make better, more informed, more research-based cryptocurrency investment decisions. Ciao for now.